Hello and welcome to this lesson on stock market sentiment indicators. In this class, I'm going to show you exactly how to interpret and understand a special area of stock market analysis called sentiment. Sentiment is the methodology of understanding the levels of fear and greed in the market. Greed makes markets rise, fear makes markets fall. But at their extreme, fear and greed is great for contrarian investing. I will guide you through using the Liberated Stock Trader Fear and Greed Index, which includes the VIX Volatility Index, the NYSE AD Advanced Decline Ratio, the AAII Sentiment Indicator, and TradingView's buy and sell gauges. I'm Barry Moore, a certified financial technical analyst, stock market strategist, and founder of LiberatedStockTrader.com, a company that has trained thousands of people in investing and trading so they can make better investing decisions. After taking this class, you'll be able to accurately understand the current level of fear and greed in the market using sentiment indicators and therefore know the direction of the markets. Believe me, this is an important lesson, so let's get started.
So now in this section, I'm going to lead you through 9 sentiment indicators. These are essentially 9 charts which you can use to assess the levels of fear and greed in the marketplace. And these, as I've said, are critical at key market turning points because the majority of people are wrong at the key turning points in markets. And this is how we can decipher the marketplace itself. So you can head over to liberatedstocktrader.com/fear-and-greed-index, fear and greed index. And that will take you to this page, and you can then interact with all the different charts, and there's all the full guidelines here on this page that explain each chart, each data set, so you can interpret it. So what is a fear and greed index? A fear and greed index tries to estimate investor sentiment in the stock market. When people feel greed, it means they are either buying or will buy stocks. This pushes prices up by increasing demand. When people feel fear, it means they are either selling or about to sell stocks, which decreases stock prices. Fear equals sell. More supply of stocks for sale, which equals stock price decreases. Greed equals buying, equals more demand for stocks, which equals stock price increases. So the first indicator we're going to look at is within TradingView. These are the TradingView buy and sell gauges. Now, they're based on technical analysis. And for me, this is a great way to measure fear and greed. TradingView bring together 16 of the most popular technical supply and demand, price and volume indicators to establish a buy and sell signal. So here's the buy and sell gauge for the S&P 500 index in the US. Now, it's a very simple gauge. It goes from strong sell, sell, neutral, buy, and strong buy. And you see the gauge right now is pointing at buy for the S&P 500 as a whole. So as I mentioned, it uses 16 popular supply and demand indicators. So this is a combination of 6 simple moving averages with time frames of 10, 20, 30, 50, 100, and 200. 6 exponential moving averages for the same time periods, 10, 20, 30, 50, 100, 200. It also analyzes the Ichimoku cloud of 9, 26, 52, 26 settings, a volume-weighted moving average of 20, and the whole moving average of 9. It also incorporates oscillating indicators like relative strength index, stochastics, the commodity channel index, average directional index, momentum, MACD, moving average convergence divergence, stochastic RSI, Williams percent range, bull bear power, and ultimate oscillator. So when any of these indicators is clearly a buy or sell, it counts as 1 point. When it's unclear, it counts as neutral. So when we look at these buy and sell indicators, we can see what the average rating is of all the technical analysis. So essentially TradingView are doing the technical analysis for you. And these buy and sell gauges are not only available for the main indices, they are available for every single stock that TradingView covers, which is most of the global stock exchanges. So to interpret this gauge, let's take a look. So on this gauge, strong sell equals extreme fear. Sell equals fear. Neutral equals is balanced. The technical indicators, which essentially interpret supply and demand in the price and volume action of a stock or an index, is essentially neutral. Buy indicates greed, and strong buy indicates extreme greed. So you can see the SP 500 is a buy. So there's an element of greed in the market. Okay, let's move to the next one. So the TradingView buy and sell gauges are essentially technical indicators that can be used to assess fear and greed. Now we're going to look at the VIX Volatility Index. So the Chicago Board of Options Exchange, CBOE Volatility Index, or the VIX, measures fear by comparing the price of put options versus call options. It essentially measures the price volatility of put options versus call options. Put options are purchased when a market participant believes the stock price will go down. This protects their assets like insurance. In fact, options should only be used as an insurance to protect your investments. The call option is purchased when a trader believes the stock price is going up. So ultimately, this index measures the volatility of those prices. A low VIX price indicates the market is good and stock prices will continue on their normal upward trajectory. So how does the VIX fear gauge work? How do we interpret this chart? Ultimately, a high VIX price above 30 indicates that more put contracts are being purchased and that investors are fearful and covering their trades with downside insurance. So we interpret it like this. This line you see here, if it's above 30 equals there's fear in the market. And if it's below 20, it indicates greed. So above 30 means there's volatility in options contracts. So people who are trading options believe the market is going to go down. So the volatility of options prices changes. So you can see here, there's a spike, here a spike. Anything really above 30 indicates that the market is going to experience volatility and go up and down. You can scroll in and out here on this chart or zoom in as you wish. And we can take that back and have a closer look here over a 20-year period. So we can see in 2007, volatility, the VIX started to rise to its peak at the crash of the property or financial crisis, as it's known here. Very high volatility index. And then as time went by, that decreased. So as I said, anything below 30 is kind of normal. Anything spiking above 30 indicates extreme volatility and extreme fear in the market. The next chart we're going to cover is the NYSE, the New York Stock Exchange Advanced Decline Ratio. The New York Stock Exchange Advanced Decline Ratio, or ADR, is the number of stocks with a price increase for any given day or week or month, depending on the time frame you choose, divided by the number of stocks with a price decline for the day. Price is ultimately the decider of fear and greed, and rising stock prices mean people feel bullish. So how does the NYSE AD ratio work? A ratio of 1 means that there was one advancing stock for every one declining stock. Above 2 means the market is in greed mode with 2 stocks rising to every one falling. So it's pretty easy to interpret. Less than 1, this blue line being less than 1, equals fear. And anything greater than 2 is essentially greed. So between 1 and 2 is kind of a no man's land. And spikes here mean greed. There's a huge amount of stocks increasing in price versus those decreasing in price. The next chart we're going to look at is a really easy one that you can set up in any charting package. Here I've got it set up in TradingView, but this is a chart that you really should establish for yourself. This is what I call the S&P 500 weekly chart, and the indicator is a simple moving average 9. So this is a weekly chart, so it's a 9-week moving average. How do we interpret this? Well, fear equals the price is lower than the moving average, and greed is price is greater than the moving average. So here on the chart, you can see we're spanning back to 2019, June 2019. And you can see here, this is the S&P 500, this thick blue line. And here is the moving average 9 here. You can see it. So we can analyze actually a crash right here. This is the Corona crash starting in March 2000. So we can see the market's happily moving upwards. The reality dawns of the Corona crash, and not for an entire year has the market moved below the moving average 9, and then suddenly it crashes straight through it. This is a clear indicator, and the price falls, and then only around about here in April 20 does the market show real signs of recovery, and it moves up through the moving average 9, and then there's a couple of fake outs here, but it stays above this moving average 9. You can, of course, smooth it, use a moving average 8 or a 10 on a weekly chart. But this is a great way to understand what's going on with the market trend. Is the market in an uptrend or a downtrend? So to recap, we take the S&P 500 weekly chart, plot a 9-period moving average over it. The price line is the thicker blue line. The moving average is the thinner line. When the price is above the moving average indicator, this is bullish, meaning the main price trend is up. Therefore, investors are greedy. When the price line is below the moving average, this indicates fear. As we're using a weekly line chart, we are estimating the long-term trend of the market. This helps you make better long-term investing decisions. And to remind you, you can zoom in and out and drag the chart as you wish to do this analysis. This is all free at liberatedstocktrade.com/fear and greed index, all separated with a hyphen. The next chart we're going to look at is a good sentiment indicator. This is the Federal Reserve Bank of Kansas City Financial Stress Index. Financial stress is defined as interruptions to the normal functioning of the financial markets. This important leading indicator is published monthly and gives valuable insight into investor stress in the financial markets. Measures include the TED spread, swap spread, stock bond correlation, and bank stock volatility. So how does this stress index work? When the value line is above 0 or positive, this indicates that financial stress is above the historical average, meaning fear. A value below 0 indicates the normal functioning of the markets. This is greed. A value above 0.8 typically indicates severe stress and fear in the markets. This occurred in 1999 and 2007. In September 2008, the index spiked to a value of 6. So we can zoom out here and see this is clearly marked. So in 2008 and 2009, you can see here there's a massive spike to 6. This clearly indicates financial stress. And when the markets and the financial system is under stress, this is very bad, as we've seen for stock markets. So here you can see massive financial stress in the credit crisis of 2007, 2008. We can see here there was some stress, but as you can see, it was still below 1. So we're still in greed mode. But here during the Corona crash here, you can see that the financial stress index had spiked to 2, which indicates extreme fear again. And this was indicated quite early on in February 20. So you would have got a heads up about the Corona crash having a severe impact on the economy by using the Kansas City Financial Stress Index. And now here you can see it's returned down to 0.05, which indicates good functioning again of the overall financial system. So a great sentiment indicator. The next chart we're going to look at is the AAII sentiment indicator. The American Association of Independent Investors Investor Sentiment Survey measures the percentage of individual investors who are bullish, bearish, or neutral on the stock market for the next 6 months. All the members of the AAII are polled every week, and then this is put together and released as the AAII sentiment indicator. So this is essentially how members of the AAII organization feel the market is going to go in the next 6 months. Now, this is very much used as a contrary investing tool because, as we know, at major market points, the majority of investors are wrong. On the chart, the central horizontal line represents the average bullish sentiment over the period. 0.35 means 35% of investors polled were optimistic that the stock market would rise over the next 6 months. So, at the extremes, the AAII sentiment indicator registered 0.2 or 20% of investors were bullish at the worst point in the financial crisis in December 2007. So let's take a look at that. We can just simply mouse scroll back and you can see here 2007, the credit crisis. There was extreme bullishness up here at 0.6 on the sentiment indicator. And that was actually the start of a major crash. And we can see here, if we look to around the time of the Corona crash, here in January 20, then it was registering 0.46, which is close to greed, essentially. So anything lower than 0.35 indicates fear, and above 0.35, or 35% of people being bullish, indicates greed. Historically, the highest level of bullish sentiment was on December 20th, 1999, when 75% of investors were bullish. So during the dot-com bubble hype, the members of the AAII organization were extremely bullish. This was just months before the main beginnings of a massive stock market crash. So this indicator is best used as a contrary indicator. So when sentiment is extremely high, it's an indication to sell. And when the indicator is extremely low, it's an indication to buy stocks. As Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. So the rest of the charts I have on here are essentially the TradingView buy and sell gauges. And it's interesting to look at these and even compare them against each other. So we looked at earlier the technical analysis for the SPX or the S&P 500, which is essentially right now a buy or in greed mode. We can see 2 of the indicators are currently a sell, 9 are neutral, but 15 technical indicators are at a buy. Now we can scroll down here and look at the NASDAQ 100 index, technical sentiment. And here we see the NASDAQ is typically a lot more bullish overall than the S&P 500. In fact, the NASDAQ 100 typically outperforms the S&P 500 by at least 5 to 7% a year in the last 20 years. So here you can see the indicators are indicating a strong buy, which is extreme greed in these technical indicators. Now we can look at the Dow Jones 30, the industrials, and we can see here it is currently at a buy. So if you register with TradingView, then you can essentially see this for any stock or index. And finally, the transport index. So here I've listed the Dow Jones 20, the transport index sentiment. So for those of you that understand Dow theory, being able to compare the DJ30 and the DJ20 is the core of Dow theory. So here we can see actually the transports are indicating a sell. Now that is a little bit of a worrying sign because as discussed in previous lessons and videos, the transports usually start to fail before the Dow Jones 30, the industrials, start to fail and break down because less goods are being transported, ready for sale, shipped around the world, trucked around or in logistics centers, etc. So these are transportation companies and you can see that is currently a sell. So if you haven't done already, I would take one of my earlier classes that discusses Dow theory so you can understand the comparison between the transports, the industrials, and even the transports and the S&P 500 or the NASDAQ 100. So there you have it. I've gone through all of the key sentiment indicators you can use to assess the fear and greed in the marketplace and make your own decision as to how to invest, when to invest. And finally, one last thing. If you like these TradingView buy and sell gauges and you're looking for a stock market technical analysis package that also covers bonds, indices, and cryptocurrency, you can register with TradingView. I'm a partner of TradingView. So if you register at liberatedstocktrade.com/TradingView, you'll get to TradingView and be able to use TradingView for free. And if you do so, you can register and follow me. My name on TradingView is Liberated Stock Trader. And if you register with TradingView, you can simply send me a message and I will give you access to my Liberated Stock Trader crash detector system. And the crash detector essentially is an indicator I have developed for TradingView, and you can see it in action here. This helps you interpret if there is the chance of a stock market crash coming up. So here you can see a chart of the NASDAQ 100 on a weekly basis, and you can see whenever the indicator flashes red, it indicates there is actually a crash in process, and you also get shock alerts. So this is for free if you register with TradingView. As I mentioned, drop me a message and I'll give you access to this private script that you can use to interpret crashes and fear and greed in the market.
Wow, you're still here. Well, I guess you must have liked this video. If you did, don't forget to hit the like button. It will really help the channel out. And click subscribe if you want to be notified about future stock investing lessons, strategies, and software videos. Finally, don't forget to leave a comment or question below and I will reply.